RIN TV coverage of the 2015 RIMS conference is brought to you by Inform Applications. We're here in New Orleans for the annual RIMS conference and exhibition. Some 10,000 plus industry professionals have ascended on the French Quarter, and we're here to bring you insights and interviews from industry executives and thought leaders at the conference. We begin with John Drzik. He is president of Marsh Global Risk and Specialties and provides a macro view of the international and geopolitical threats affecting the industry. A good way to start our coverage.
So what are the top three geopolitical threats impacting international companies? Well, every year Marsh participates in the World Economic Forum's study on global risks. And this year, geopolitical risks rose to the top, and the top three there were the risk of interstate conflict, the risk of state collapse, and terrorism. Well, there's a lot of different exposures that are affected by these threats. For example, you can have the most direct exposure of war, terrorism would be direct damage on the investment that you might have in a particular country. But there's also the indirect effects of new regulations that might stem from geopolitical friction. So you could have trade sanctions, other types of economic tools that countries are using in the rising geopolitical risk context. And this, by its nature, can cause other types of impacts and exposures for companies like forced divestitures. And finally, I think any type of geopolitical friction can cause a business interruption effect, both for your own company or in your supply chain, which could then have the cascading effect on the company. So what are the common mistakes that a risk manager might make? Could include trying too hard to identify exactly which countries effects are going to take place in, and perhaps only taking out political risk insurance on a narrow set of countries, or potentially a narrow set of coverages. We tend to think that it's much better to have multi-country insurance and coverage that's broader, because it's quite hard to predict these effects, and there's a wide range of potential geopolitical events that are out there, and so better to go broader. I think another common flaw would be to look too short term. Think, these political events play out over long periods of time, and it's better to look for a kind of term risk transfer rather than something that's quite narrow. Well, there's a lot of different approaches to mitigating, managing, or transferring this type of risk. I mean, it can start with just looking at mitigating the risk within the project, because the risk of geopolitical risk is not just the country of focus, but also the blend of the project within the country and the countries. There are oftentimes project risk controls that can be put into place. You can also look at the nature of your joint venture partner locally, and local joint venture partners can help mitigate the risk, as can, for example, getting involved with an international agency like the IFC, which will then, it'll be much harder to take action on a project and investment where an international organization like that is involved. But of course, you have all the traditional tools too, in terms of political risk insurance, and then portfolio diversification, both in your investments and in your supply chain. So what advice would we give risk managers facing this type of geopolitical environment? I think one would be to make sure you're considering this as a dynamic environment, that it's not strictly, look at the investment at a point in time, take a view at that point, and then run with whatever risk transfer or risk management program you have in place. This is a dynamic risk. It's changing frequently, and you want to look at it over a longer horizon. I think it's also, as I was saying earlier, taking a broader view of the countries where this type of risk might take place. It's not just picking out the 2 or 3 out of 20, but really looking at the wider range. And then I think lastly, it's really looking at all the potential risk mitigation options that are there. And there are a number of creative options, looking at the contract structure, joint venture partners, in addition to straight out risk transfer.
Over the next few days, we'll bring you more from our interviews with industry leaders from RIMS 2015. So keep it here for complete coverage on RIN TV.